Well, it's that time in the show to check in on the grain markets with our grain marketing specialist, Dr. Kim Anderson. So Kim, let's start with wheat. What's going on with prices?
Well, you look at wheat prices, go back to late July to now, they're down about $1.75. We've knocked off 20 to 30 cents over the last week or so. If you look at the average price over that period, it's been $7.60, and the current price is down around $6.75. If you go to southern Oklahoma or the Panhandle, prices are about a dime lower than they are right now. And if you're looking at forward contracting for 24, a dime lower in central Oklahoma and about a dime higher in the Panhandle.
So for the past couple of weeks, you've really been kind of talking about which country, in the world market has big impacts on prices. But for wheat, which country really does have the biggest impact on price?
I think you got to look at exports. Of course, Russia, the largest exporter of wheat. Now we're looking at bread flour wheat here because like Australia has hard white wheat, we don't have the European Union here with soft wheat that goes into other products besides bread. But Russia has 37% of the market, Canada 20%, Australia 17%, the US and Ukraine about 8%, so you'd say Russia, but it's a world market. You take a bushel away from any of these countries or add it to these countries, it's going to have the same impact. If you're looking at risk and if you have a problem in any one country, it's going to be Russia or Canada. Now, Canada hasn't started their harvest yet. Australia and Argentina's in the winter. Russia's about halfway through theirs, as is Ukraine, and the United States, we don't have our spring wheat crops in. So there's a lot of risk still out in this market, but it's hard to say which country has the biggest impact.
But with all that, should prices be this low?
Well, I think to determine where prices should be, you got to look at the numbers and you got to look at historical prices. Look at production. World production, 28.2 billion bushel for a average, 5-year average, 29.2 record. If you look at bread flour wheat around the world, 8.43 billion bushel average, 8.37, so not much change there. But if you look at the United States, our average hard red winter and hard red spring wheat is 1.12 billion bushels, and we're only at 1 billion this year. So from production standpoint, world is in relatively good shape. The U.S. tight. Now, ending stocks, the average is 10.3 billion, 9.8. Not relatively tight stocks, but below average. Bread flour wheat, 1.61 billion, 1.35 this year. Tight stocks. Hard red hard wheat in the United States, average is 628 million, 394. So relatively tight stocks.
So how do the current prices right now compare to like the historical prices in the past?
Well, I like to look at 2008 through present, and the average annual price in Oklahoma is $5.80. Now, if you look the June, July, and August average over that same time period, it's $6. And in 23, we've averaged to date since June 1, $7.60, and our current price is $6.75. So we're below this 3-month average, but we're above the $5.80 average, and we're above the $6 June through August average. So we got slightly above average prices at $6.75.
So I'm going to feel like a game show host asking this question. So how low will prices go, Kim?
Well, you just saw these numbers. Where do you think prices should be? Should they be above average or below average?
Well, given my one econ class in college, maybe above average?
I think obviously they should be above average, and the 675 is where they should be now. Now, people don't like to hear that, but the market's got it there, and that's where it should be. I think this is pretty much at the bottom of what we're going to see over the next few months, but there's a lot of wheat harvest left around the world.
All righty, thanks, Kim. Dr. Kim Anderson, Grain Marketing Specialist here at Oklahoma State University.